I know there's been some rumors in the market of Tesla being interested in a larger company like an Albemarle, or they could buy a junior producer that's not yet producing but has big resources. Someone like a Lithium Americas potentially, who with their 3 projects, that would be enough to supply most, if not all, of Tesla's production. But they would still have to, after buying the company, then develop the projects and get them to production.
Seth Goldstein joins me now. He's the equity strategist and chairman of the Electric Vehicle Committee at Morningstar Research Services. Seth, welcome.
Thanks for having me.
You bet. Seth, your expertise and your observation of the electric vehicle industry appears to be, bar none, one of the best. So I'm curious as to, I'm going to start this conversation with this idea that, there are some alternative battery technologies out there that don't contemplate the use of lithium, and that sort of trend is inspired by the rising lithium cost, which is itself a direct outcome of the convergence between a deficiency on the supply side versus an increase on the demand side. So my first part of the question is, do you see those alternative chemistries having any serious role in market share of the future of electric vehicles? And secondly, how is the rising demand versus the not keeping up supply going to affect the price of electric vehicles in the future?
Within the transportation industry, I don't see there being a substitute for lithium, because lithium as the energy storage component is the only metal light enough that can make an EV go far enough that consumers actually want to buy it, and it can be useful for, industrial cases like buses or trucks. When you look outside of transportation, there can be a hodgepodge of different battery storage metals that can be used, energy storage metals. So you can use something like vanadium, you can use something like zinc. These batteries are being studied, and I think they will have a place in the energy storage market, but in transportation, I think it's going to be all lithium. So with lithium prices rising, what has happened is right now, EV prices will start to go up as contracts reset and as lithium producers continue to realize higher prices. But over the long term, I think this will also incentivize a lot of new supply to come online, get a lot of lithium producers financing to build new supply. And over the long term, I think the market will balance. But, at least until the middle, if not end of the decade right now, I expect lithium will be undersupplied and lithium prices to be well above the marginal cost of production.
The commodity price for lithium as expressed in the futures contracts is quite a bit higher by like a factor of 4 of the actual contract price that manufacturers of anodes, cathodes, electric vehicles, etc., are actually paying for delivery of lithium. That sort of spread is, $20,000 per ton in the real world versus $80,000 per ton in the futures world. How soon are those prices going to narrow? Is that gap going to come down in your view?
I think over the next several years, you will see prices converge. You will see contract prices rise. I wouldn't be surprised if spot prices continue to fall. I believe this Monday, spot prices were reported to fall slightly in the carbonate market. And so I wouldn't be surprised if eventually those two converge. We've seen this happen before. We've seen in 2018, I believe spot prices started to fall, but actually a company like SQM, when they reported their prices each quarter, reported rising prices. So, we've seen this divergence occur before. I would expect it to occur again in sort of a convergence at more of a midpoint for both companies, or both prices.
And so I guess that in part drives Elon Musk's recent sort of Twitter musings that he is looking at entering the lithium mining and refining market. He's already made an investment in nickel production, and so we see him sort of moving in that direction. Where are the big opportunities where Elon Musk might be able to take on the kind of size of supply that he would demand as he expands the Tesla consumption?
if Tesla ultimately wants to get into owning lithium resources, I think they'd have to acquire a company. The company really doesn't have any mining expertise, any geological expertise. They could spend years trying to build and develop a project on their own, or they could go out and buy an existing producer or a company that's developing projects. Now, Tesla's going to need a lot of lithium. So even if they do make an acquisition, I'm not sure they would account for 100% of their lithium needs, but it at least would give them their own internal supply, so they would have a lower average realized cost of lithium. But I would expect if Tesla is serious and this isn't just a negotiating tactic to try to get lower prices out of lithium producers, I would expect them to either buy an existing company, potentially like a Livent, or I know there's been some rumors in the market of Tesla being interested in a larger company like an Albemarle, or they could buy a junior producer that's not yet producing but has big resources. Someone like a Lithium Americas potentially, who with their 3 projects, that would be enough to supply most, if not all, of Tesla's production. But they would still have to, after buying the company, then develop the projects and get them to production.
Sure. Lithium Americas is a company that we've been tracking as well, largely thanks to your coverage. And you view, in your research, you stated that Lithium Americas is the most undervalued producer in your coverage universe. And what are the features that make it so undervalued and an opportunity for both investors and possibly an Elon Musk?
Well, the reason I view Lithium Americas as the most undervalued lithium producer on my name right now is because there's still a lot of uncertainty regarding their production. As a company that's not yet producing, that carries extra project-specific risk. There's also a risk with Nevada that they ultimately do not get Thacker Pass approved, or there's further delays due to the environmental activist lawsuit. I think given the favorable U.S. presidential administration views on building out an EV supply chain, I think that they will ultimately prove successful and be able to retain their U.S. EPA approval to get the project into construction and advance and ultimately ramp up production. But there is a lot of risk there. I also see a lot of longer-term volume opportunity for Lithium Americas beyond what they've announced in their phase 1 or phase 2. And this is at both Cauchari and Thacker Pass. So, I think if you're just looking at Lithium Americas and valuing it based on even just the initial volumes that management has guided to, you're going to come up with a valuation that's much lower. But if you look at the 2 giant resources where they will be operating, the Cauchari-Olaroz Basin in Argentina, and you look at the Thacker Pass resource, this has the opportunity to scale much further beyond the phase 1 and phase 2 capacity, leading to higher long-term volumes and higher profit growth than what the market's currently implying.
So then what about the other battery ingredient inputs, cobalt, manganese, nickel? Are those threatening to drive the price of EVs up as well in the near term?
They are. There is an undersupply of many of the battery raw materials right now. And I think that's why we're seeing many EV makers look at having 2 different types of battery chemistries. Many EV makers are copying Tesla's route of looking at having a high nickel-based battery for many of their long-range EVs, and then offering an LFP battery chemistry where iron and phosphate is a lot more readily available supply as a way to have a battery for a lower range vehicle. So I think you're going to see, many automakers go with that strategy as a way to diversify their raw materials need and reduce demand for, products such as nickel, manganese, and cobalt.
And also we've seen that both CATL and LG Chem are partnering with automotive groups to build battery supply in North America. Is that going to be a catalyst to the upside for Tesla in that it might make batteries more cheaply available? Or will Musk's intention to have an everything under one roof approach and therefore go it alone on the battery side, is that going to sort of catalyze a negative for Tesla?
I think when the automakers are wanting to build their own factories, it's so that they can make customized batteries for their specific vehicles. Very much the same way Tesla partnered with Panasonic to make their own vehicles and also has partnered with LG and CATL. So I think it's just automakers really taking a step upstream and looking at what do we need to be able to mass produce EVs. The biggest component that they have to change is the battery. So it makes sense to have a joint venture with the battery makers to be able to mass produce customized batteries and be able to easily change that and not have to rely on a battery maker to go back and forth with designs or, they can help run the plant, have a greater say on meeting manufacturing targets and that type of thing to increase their own EV fleet. So I don't think it really has anything to do with Tesla. I think Tesla will continue to go on their own or partner with battery makers, which is kind of what's being copied around the industry. So I just expect this to be how this industry will evolve over time, where it's not just the automakers contracting with suppliers, it's the automakers working together to form joint ventures with their suppliers, especially for key components like a battery.
So I guess that drives the logic behind the idea that Tesla could buy a Lithium Americas if they wanted to get into that side because they need to secure supply.
I think securing supply is going to be one of the biggest challenges for an automakers, especially in lithium. And if automakers are serious about wanting to ramp up their battery electric vehicles and, meet the targets that they've been stating in recent investor days and, when making public statements, then they need to move further upstream. It's not enough just to have your battery and your powertrain in place. You need to secure the raw materials because lithium is in shortage. And to your point, with demand outpacing new supply, at least over the next several years, that would lead to production delays or, underutilized capacity and weigh on profitability of all these new battery investments that the automakers are making.
All right, Seth Goldstein, that was great input. I appreciate your time today. We'll come back to you in the future. Thanks for your time.
Thank you.
You bet. Bye for now.